If you're an investor or just a stock market enthusiast, you've probably noticed the roller coaster ride Palantir has been on recently. In fact, the stock took a massive dive of 30% from its 3-year high of $125, leaving many to wonder, what's going on with Palantir? Is it a massive buying opportunity, or is this the beginning of a bubble finally bursting? Well, buckle up, because we're diving deep into Palantir's financials, its recent performance, and whether investors should be loading up their portfolios or running for the hills. Let's break it down. The 30% crash, what happened? Palantir, the data analytics giant that's known for making waves in the AI and government sectors, had been on an impressive upward trajectory. At one point, it was riding high at $125 per share. But then, bam, a 30% crash. Ouch. So what caused this steep drop? The short answer is, a mix of market sentiment, broader economic concerns, and the looming shadow of military budget cuts. Palantir, with its significant ties to government contracts, particularly military ones, is somewhat susceptible to changes in defense spending. And when the news broke that the U.S. might be facing cuts in military budgets, investors started to panic. After all, Palantir has a good portion of its business tied to military contracts. Investors took a step back, hit the sell button, and just like that, the stock took a nosedive. But wait, it's not all doom and gloom. Palantir still posted some incredible earnings, so let's get into that next. Now, you're probably asking, wait, if Palantir's stock crashed, how can it still be doing well financially? Good question, my friend. In fact, Palantir delivered one of its strongest Q4 reports on February 3rd, beating Wall Street expectations and showing why the company is still a force to be reckoned with. Let's talk numbers. In Q4, Palantir's revenue surged 36% year-over-year, reaching an impressive $828 million. This is huge. Analysts were expecting about $775 million, so Palantir beat those estimates by a solid margin. To put it simply, the company's revenue growth is on fire. And here's the thing that really caught the market's attention: Palantir's ability to consistently grow its revenues and margins, despite all the noise in the market, is proof that it's operating in a league of its own. Despite the challenges, this company knows how to deliver the goods. So while the stock may have taken a 30% hit recently, it's clear that Palantir has a strong financial foundation that could make it a major player in the future. But we need to talk about something else that's been making headlines: military budget cuts. Military budget cuts, Palantir's Achilles heel. Now, let's address the elephant in the room. Palantir, as mentioned earlier, is heavily involved in government contracts, especially military ones. The company has built a reputation for providing advanced data analytics and AI tools to organizations like the Department of Defense, intelligence agencies, and various government entities worldwide. However, when the news about potential military budget cuts broke, investors started to sweat. Here's why it matters: if the government slashes defense spending, that could mean fewer contracts for Palantir, and possibly slower growth in one of its most important sectors. It's like being on a high-speed train that suddenly hits a speed bump; things can slow down fast. But more to that, Palantir might not face budget cuts due to the sensitivity of its offering. But here's where things get interesting. Palantir's business isn't just about defense. The company is also branching out into commercial sectors, including healthcare, manufacturing, and more. This diversification helps mitigate some of the risks that come with relying too heavily on government contracts. So while military budget cuts might create some short-term uncertainty, Palantir's future growth might not be as tied to this issue as some think. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. But wait. Please support us by becoming a member of our channel. We highly appreciate. So, is the evaluation retreat a buying opportunity or a bubble ready to burst? So, we've seen the stock take a hit, we've seen the strong earnings report, and we've talked about the military budget concerns. So, what does all this mean for Palantir's future? Here's the thing, the evaluation retreat we're seeing right now might actually be a healthy correction. If you look at Palantir's rapid rise over the past year, 280% up, by the way, it's easy to see why some investors might be a little nervous about a potential crash. But the truth is, corrections happen all the time in the stock market. It's like when you take a breath in between sprints, Palantir needed this breather. And let's not forget that Palantir's revenue is growing fast. The company's margins are expanding, and as they continue to tap into new markets, it's highly likely that earnings will outpace their market cap in the near future. The company is still in the early stages of its growth cycle. They've got room to run. So, is Palantir a bubble that's about to burst? Honestly, it's hard to say. It's one of those high-risk, high-reward stocks. But what we do know is that Palantir is far from just another flash-in-the-pan AI company. They're building something much more substantial, and that's worth paying attention to. Alright, here's where things get really interesting. Unlike many other AI players in the game, Palantir has built its operations around a proprietary ontology system. Sounds fancy, right? But what does it actually mean, and why should investors care? Let's break it down. In simple terms, an ontology system is a way to organize and categorize data. Think of it like the blueprint to a really complicated house. Without a solid blueprint, the house would fall apart. The same goes for data. It needs structure to be useful. Palantir's ontology system organizes data in a way that makes it incredibly effective for AI implementation across a variety of enterprise use cases. For example, Palantir's software helps companies make sense of vast amounts of data, from supply chain management to healthcare predictions. This structure allows AI to work more efficiently, making Palantir a key player in the enterprise AI space. This is a huge advantage over companies that are still trying to figure out how to effectively structure and analyze their data. In other words, Palantir isn't just building AI, Palantir is building a system that makes AI work better in real-world applications. And that's a big deal. So, here's the million-dollar question, what should investors do with Palantir right now? Should you jump on the bandwagon, or wait for the storm to pass? Honestly, the best strategy might be dollar cost averaging, DCA. Here's the deal, instead of trying to time the market, which, let's be real, is like trying to predict the weather in the middle of a hurricane, DCA allows you to invest a set amount of money regularly, regardless of the stock's price. This way, you buy more shares when prices are low and fewer when prices are high. Over time, this can help smooth out the volatility. Think of it like buying pizza for your friends. Sometimes you'll get a good deal, sometimes you'll have to pay a little more, but at the end of the day, everyone gets pizza. And in the case of Palantir, everyone gets a stake in a company that's growing fast, diversifying, and building something special. Palantir's stock may have taken a hit, but this doesn't mean the company is doomed. In fact, the recent correction might be exactly what the company needed. With strong earnings, expanding revenues, and a proprietary system that's making AI work like never before, Palantir's future still looks incredibly bright. So, should you be buying the dip? It's possible. But remember, this is a long game, and patience is key. Keep an eye on the fundamentals, stay disciplined with your investing strategy, and use DCA to build a solid position. As always, make sure you do your own research before making any investment decisions. This is a wild ride, but if you're in for the long haul, Palantir could be a stock worth keeping on your radar. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love Him and obey His commandments. Please acknowledge Him in your plans and He will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Please check the description section. Also again, I invite you support us by becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today. Your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you. See you in the next video by God's grace. We love you, and blessings to you.